Welcome to the Power and Market Report. I'm Albert Liu. My guest today is the author of numerous New York Times bestsellers, including Rich Dad, Poor Dad, the #1 personal finance book of all time. He's also the co-creator of Cash Flow, the board game, and co-founder of Rich Dad Company. This year, he released yet another title, Second Chance, For Your Money, Your Life, and Our World. Robert Kiyosaki joins me via Skype. Robert, thank you so much for coming on the program. Welcome to the Power and Market Report. How are you?
Thank you, Albert. I'm honored. I'm doing great,
The honor is all mine, and you know, I've been a fan for quite a while. I first picked up Rich Dad, Poor Dad probably back in 2004, 2005.
Oh, early.
And it was quite an experience. And you know what's interesting about you is since then, of course, you've been active for the whole time. The message has evolved. You started with pretty basic message there about independence and financial education and running your own business. But since then, you've branched out. You speak now about all kinds of things. You speak about central banking. You speak about hard money. You speak about the Federal Reserve and macroeconomics. And one thing that I really like about you is that you have mainstream or broad-based appeal, but your message at times can be quite contrarian and edgy. And the other thing about you that I enjoy is that being a motorcycle guy myself, I know that you have a passion for motorcycling, so that's yet another thing we share in common. But what I want to ask you is about coming with a contrarian message yet having this wide appeal. How do you think you've been able to do that where not everyone has?
Well, it's pretty simple. I keep it simple, as you know. And too many financial experts and advisors use vocabulary or words that people don't understand. So other thing too is that, as you know, there's financial advice for poor people, middle class people, and rich people. And for poor people, there's Susie Orman. And Susie Orman's advice is very, very good. If you can't control your spending impulses, cut up your credit cards. So what happens, and it's not how much money you make. Like for Susie Orman, there's many people who make $1 and they spend 10. Well, you better listen to Susie, don't listen to me. If you can't control your spending habits because you're a habitual shopper, then Susie Orman should scold you. The second category is the middle class, and the middle class is bought into the go to school, get a job, work hard, save money, and invest for the long term in the stock market. And that's not what I do. But anyway, the middle class, their advisors are guys like Dave Ramsey, Rick Edelman, David Bach, and Tony Robbins. And basically, they tell you to turn your money over to either mutual funds, the worst possible investments of all, or ETFs and stuff like that. That's what middle class people do, is they invest for the long term in the stock market and a well-diversified portfolio. That bullshit, but that's middle class. As Dave Ramsey always says, live debt-free. Well, that's not what I do. I don't want to be debt-free. Now, Dave Ramsey is a good friend of mine. So is Susie Orman, so is Tony Robbins. We just have different ways of looking at it. So there was a long period of time where my wife and we didn't live debt-free, but we lived in a very nice house in Phoenix. Our mortgage and all the payments came up to a little over $300 a month, whereas rents in the area were about $800 or $900 for a comparable house. So we were paying less to own the house, although we had debt on it. And what drives the middle class broke is those idiots go out and try to buy the biggest houses possible. So while we were rich, we were living in this tiny little house. It was at the Point Hilton. It was a Hilton Hotel Resort, so it was pretty luxurious. We had swimming pools and all this stuff, but we kept our monthly payments, our debt, really low. Meanwhile, we were loading up on debt for apartment houses. So there's good debt and bad debt. So bad debt was debt on our private residence, and good debt is on our apartment houses. So today we have about 10,000 apartment houses. And every month our monthly cash flow is massive. But had we done what the middle class generally does is, you get a pay raise, you buy a bigger house, new car. So that's why what Dave Ramsey says and Tony Robbins and Edelman and all, they say it's very smart, just live below your means, get out of debt, and give them their money. And invest for the long term, buy, hold, and pray. But that's not what I do. But I did that for a while till I got into the rich side. So if you notice, my partners are like Donald Trump. And Donald Trump and I are rich guys. We don't have jobs. We're entrepreneurs. We invest in large real estate projects. I have 5 golf courses. I don't know how many he's got. But I also have hotels. So again, there's poor, Susie Orman, cut up your credit cards. Dave Ramsey, live debt-free, live below your means. That's drive a Toyota Prius, which is not me, and then you can be rich. So what makes the differences here is who you are and who your financial advisor is depends upon you. So if you, like I said, if you can't control your spending, I would just listen to Susie Orman all day. And if you really don't like risk and all this, then it's Dave Ramsey. Live debt-free and buy mutual funds, the worst possible investments possible, and invest for the long term. And that's what you should do. Now, on the rich side is I use debt and I don't pay tax. So what happens for the average person when I say don't pay tax, their emotions go up and they go, oh, I don't want the IRS auditing me. So they pay their stupid taxes. It's not the IRS's fault, it's your fault. So who you listen to depends upon you. And Trump and I are good friends. I don't like what he's saying about my Hispanic friends, obviously, but that's Trump, But he and I play by a different set of rules than the middle class and the poor. So that's my spiel.
I think there's another difference as well, and I see everything that you just pointed out. But there is one other difference about you. I noticed that a lot of people, obviously everybody wants to be rich, and more specifically, everyone wants to live rich. But they don't often want to make the sacrifices that come along with getting there. And one of those sacrifices you mentioned about not spending or not loading up on consumer debt, that's certainly one of them. But the other thing is that you have to put your mind to it and you have to learn. And I've met over the years, Robert, many people. I run an investment or several investment groups myself. And one thing I've noticed is that the cash flow groups, they are among the most highly attended investment groups you'll find around. People who follow you love to learn as well. Why is it that they love to learn and they just don't want to live rich?
You've got it. See, the key is, are you an active learner? That's why when you called and said, get on your program, I'm happy to talk to you. Because I want, like you, I want to encourage people to be active learners. See, this market is changing so fast right now. China's going down. Russia has bases in Syria. He's backing Assad. We're going to try and kill Assad. You got ISIS. You have emerging markets crashing. And these guys who have 401ks, you're getting screwed. You bought you drank the Kool-Aid of go to school, get a job, work hard, save money, buy a house, and invest for the long term in the stock market in a well-diversified portfolio of mutual funds. That's the worst possible advice after the year 2000. It was great advice up to 2000. So that people say, well, what do I do now? It's 2015. Well, you got to study. You got to be a proactive student of markets, of different asset classes and all this. Now, most people aren't going to do that. You know that, and I know that. I just got off an interview with a Chinese business magazine, and I said the problem with Chinese, I'm Japanese, I can say this. The problem with Chinese is they're gamblers. They love, they play mahjong and gamble all day, So I said, Japanese aren't that, Japanese are a little bit more methodical. And I would say that there's I'm sure you see it in your clientele, a lot of them are just gamblers. They're not students. So if you want to be a gambler, just go to Vegas, put it on the red and roll. You got 50-50, no, you probably have 47% chance. Yeah. But the house always takes a 3%.
Absolutely. And I want to get back to Donald Trump and the markets a little bit later, but while we're on the topic of education, that has been sort of your central theme for decades. And one thing about Rich Dad, Poor Dad, which I think separated it not only was it very readable, very accessible, but I think it highlighted something very important about mentoring. When we think about mentors, we usually think about positive mentors, meaning mentors that we want to emulate. But you brought out another way to use mentors, and that is to study and learn from other people's mistakes, or to study from the decisions that they've made, hence the poor dad aspect of it. And where did that come from, and is it something that you've always used yourself?
Well, my attitude on the quote-unquote education and mentors or teachers came from that I hated school. You know, here my old man, poor dad, was a PhD. You know, he was the model Asian. You know, he went to school, he went to Stanford, he went to Northwestern, went to the University of Chicago, gets his PhD. And all of my uncles and my aunts said, oh, you know, you're a good Asian boy. Well, I wasn't that way. You know? I was flunking out of school, I was surfing and I was having a good time. And that kind of let me step outside what I call my Asian culture. You and I are Asian, so we know what we're talking about, right? The tiger moms and all that crap and all this stuff. You know, I'm out there surfing, cutting school, having a great time, you know. And I said, you know, this ain't that bad. And my mom and dad are going nuts. Ah! You know, so that's when I said, I better find another way, another philosophy, another way of thinking. And that's kind of when I realized I wanted to be more like my rich dad. He was Chinese, by the way, and he never went to school. And I saw him thinking differently. So by having, you know, two dads in the perspective, I was able to see the world from at least two different points of view, and then ultimately come up with my point of view. Unfortunately, too many people, especially it could have happened to me, I stay with my mom and dad who are academics. My whole family is academics. They go to school. I'm the loser because I'm not a straight A student. You know what I mean? And I would have felt like a complete failure because I'm not Asian academic. And I was a surfer kid who was just having fun, and then my education is military school. So I'm in Vietnam shooting Vietnamese, you know? Going, there's something, my life is kind of screwed up. So by having multiple points of view and different teachers, and I realized that everybody is smart. All of us are smart at something. Unfortunately, as you know, academics, there's only one type of smart, and that's academic smart. So they become doctors and lawyers, which I will never do. So today I hire doctors and lawyers. I don't want to be a doctor and lawyer. So it required me to be smart as an entrepreneur. And today I'm kind of still this entrepreneur. I don't have a job, I don't have an office, and I don't want one. You know, I just want to, you know, my rich dad being Chinese, he taught me playing Monopoly. So, you know, the formula for Monopoly is the same all over the world. 4 green houses, 1 red hotel. So today I own 10,000 houses and 2 red hotels and oil wells and golf courses. It's more fun. So I like being rich like my friend Trump.
Can you talk a little bit about your other mentors? I mean, certainly we have Poor Dad, who kind of set up the academic mainstream mold, and then Rich Dad, who sort of smashed that mold and put you into the entrepreneurial realm. But you don't only run businesses. I mean, you talk about, like I said, hard money. You talk about Federal Reserve, macroeconomics, geopolitics. Are there any other mentors that you want to point to who kind of turned you on to some of those ideas?
Yeah, probably my best teacher was a man named Dr. R. Buckminster Fuller. By the way, it's a commercial message. I have a book called A Second Chance, which came out in January 2015. And that's really why I wrote Rich Dad, Poor Dad, is because I had a mentor named Dr. R. Buckminster Fuller. And people don't know of him, but he's a guy that created the geodesic dome and things like this. He's considered one of the greatest geniuses of our times, but nobody knows about him. And he was a futurist. So he taught me how to predict the future. So I can call markets fairly accurately. So when I was not a kid, I was in 1983, he came up with a book called The Grunch of Giants. Grunch stands for Gross Universal Cash Heist. It's how the ultra-rich rip off us. And I read that book and I understood it. You know, we're being ripped off. You know, today it's called Goldman Sachs and those guys. The Fed, the Chinese central bank, the rich control the world. So it's how the rich operate. So in 1983, I read that book, and it was the same thing my rich dad was saying to me. That if I go to school, get a job, work hard, save money, invest for long term in the stock market, and get out of debt, I'm being manipulated by the ultra rich. So at 83, I read that. I went, oh my God. So my rich dad wasn't just jerking me around. My rich dad was kind of tuned in to a different mindset, different mentality of the rich. So that really changed me. So 83, I kind of quit I sold my businesses and all this, and I became a teacher. So my latest book, A Second Chance, is unavailable. There's a lot of pictures on it. It talks about Bucky Fuller, how I met him, how he taught me to see the future. So since most people don't read today, I created another video to sell the book. So I created a book, The Man Who Could See the Future. So it's 60 minutes long. It's for free. You can download it and watch it, and you'll see how to see the future. And what you'll see is what technical guys always watch. But most technical guys are in the seconds now. They're really short term. What I did was I tracked the markets from 1895. So you can see the big picture. So today we're in this massive, massive, massive bubble, the biggest bubble in world history. And down here is a little thing called the 1929 stock market crash. And so you look at this. So again, Bucky taught me how to see the future. So when you read Second Chance and you watch the video, again, it's free, you can see, and at that point, you can say, oh my God, which way we're going to go. So right now, as you know, the markets are going like this. It's a topping movement. And I think we're going to go this way, the biggest depression in world history. Now, for most people, it's bad news. But, as you know, you make more money when markets crash. So that's why I started this whole discussion with you. There's Susie Orman, who says, cut up your credit cards. Dave Ramsey, who says, live debt-free and buy mutual funds. That's good advice. But for guys like me, I like it up here because I made my money going this way. I exited the stock market in May of this year. And now when it goes this way, when it comes down, I'm going to go back in. So that's kind of the differences between Susie Orman, Dave Ramsey, and me. Is number one, I use debt. Number two, I don't pay taxes. Number three, I don't care if the markets are up or down. I don't really care because either way, I'm going to make money. Now, what happens with the middle class guy who is listening to me right now, their mind is going, oh, that's so risky. You shouldn't do that, Well, if you can't control that little second middle class mind of yours, then listen to Dave Ramsey or listen to Susie Orman. You see, that's really that's the world today. You're either poor, middle class, or rich. And again, poor doesn't mean you're poor. Poor means you can't manage your money. You make $1, you spend 10. Listen to Susie Orman. Because if you make $1 when you're rich and you spend 10 million, you're still poor. So that's really kind of the message of Rich Dad. And then from there, which asset classes? Real estate, stocks, bonds, mutual funds, entrepreneurship. It doesn't make any difference. I just love the markets. It's fun.
Robert, I want to talk about the markets, but just before we get there, this is irresistible. When I was researching for this interview, studying your story, there was some irony there. And let's start with this one. I discovered that one of your first business activities, or your first business, which you started as a child, involved literally making money. Can you talk about that?
Well, I asked, the way the story of Rich Dad, Poor Dad starts, I grew up in a little sugar plantation town called Hilo, Hawaii. We're all indentured servants. We're basically the Mexicans of our time. we were paid slaves, because slavery was ended, so they had to pay us something. So I was fourth generation, so our families came over from Japan and China, Portugal, Philippines, and stuff like this. So I'm in this school, and 9 years old, and I raised my hand, and all my classmates are rich guys for some reason. They owned the plantations, and my family worked for the plantation. It's like rich and poor. So I raised my hand, and I asked my fourth grade teacher, I said, hey, I want to be like these guys here. They own plantations, they got nice cars, they have beach homes, they have ranches, how come they're rich and I'm poor? That's what I want to know. And then I said, so when are you going to teach me about money? And it was a white teacher. She says, very Christian. we don't teach you about money in school. I went, well, why not? She says, and I could hear her brain going, well, the love of money is the root of all evil. So I could pick up this religious undertone, I'm going, well, that's not my religion. So I'm 9 years old. I said, I better go look for another school or something. And that's where it all started. So I went to see my old man, again, PhD. PhD stands for poor, helpless, and desperate. And I said, hey, Dad, how do I get rich? He says, well, you make money. I said, oh, that's a good idea. So I had to figure out how to make money. And so then I saved up all the toothpaste tubes. And imagine this, back then, toothpaste tubes were made out of lead. So my friend Robbie and I, we melted down our lead toothpaste tubes, and we started making nickels and dimes and quarters. And my father comes home and he goes, what are you guys doing? He says, oh, we're making money. And he goes, son, that's called counterfeiting. What does that mean? He says, it means you're going to go to jail. What? You told me to make money. He says, yeah, but that's counterfeiting. So years later, now that I'm older and wiser, that's what the rich really do, is they counterfeit money. The Federal Reserve just makes money out of thin air. And when I understood that, I went, hey, I should do the same thing. And that's the difference between rich and poor and middle class. I don't work for money. Chapter 1, Lesson 1 in Rich Dad, Poor Dad, the rich don't make money. I counterfeit it. I make it up out of my head. I don't need money. I don't work for money. If I need money, I just go find a project, I find a banker, and find 2 investors, and I say, we do it. And we do it. And it throws off cash flow, and then I have cash flow. And cash flow is the least taxed of all incomes. On top of that, if I use debt, I pay no tax on top of that also. So I make millions of dollars and pay no tax legally. That's what Trump and I do. So that's what I'm saying. There's poor, there's middle class, there's rich. And you, as a listener, are going to choose your type of mentality, your philosophy, and then your advisor. That's how it goes.
The irony is that that's quite an interesting start, counterfeiting for someone who is an outspoken critic of the Fed. The other thing is maybe your friend Robbie is Robbie a governor at the Federal Reserve now?
No, I'm not a critic of the Fed. I'm a critic of the school system. You see, the Fed gives me a lot of money. My bank, they're a bunch of crooks, but they give me a lot of money. The biggest criminals are school teachers because they don't know what they're talking about. Most of them have this Christian Judeo thing that the love of money is the root of all evil. And then because of that philosophy that money is the root of all evil, they don't learn anything. My whole family, they're very religious and broke and educated. That's not quite what I wanted to grow up to be. I was a surfer. I didn't want to sit around and read the Bible and be poor. Not my, the thing I was taught, if you teach a person to fish, you feed them for life. You give a man a fish, you feed him for a day. Something like that. And I went, hey, that makes sense. But today, most people are saying, oh, we need more entitlement programs. This guy Obama is a hardcore communist. And he's from Hawaii, too. He thinks you should give people money. I'm going, well, that only runs up our entitlement programs. As you know, the pensions for most public servants, like the firefighters and all that, they're banked, they're empty. The government stole it from them. So we're going to have a massive crisis in a few years when people find out, like Social Security is empty. They've been robbed. And and I know it's coming. So what are these guys going to do? Save money? And the Fed's printing money? You got to be crazy. That's the problem, is our school system is a criminal organization because they're getting paid and delivering bad goods. That's my point of view in life.
Another thing that you talk about is how you shouldn't save and how rich people don't save. It sounds counterintuitive, but I think what you're really saying is that you don't want to save money because obviously the accumulation of wealth itself, whether it's houses, hotels, golf courses, is in a way savings. But I think your criticism is really targeted toward people who save money.
No, you're off base there. I have 100% debt. Look, there's debt and equity. There's only there's two things out there, right? So There was a book in '96 that came out. It was called The Millionaire Next Door by, I forget his name now. Good book for the middle class. But it was also the time from 1974 to the year 2000, we had the biggest boom going. And we had this biggest boom because Nixon took us off the gold standard in '74. So I was in Vietnam, no, '72. I was in Vietnam in '73. My rich dad sends me a letter, and this is in my video, The Man Who Could See the Future. He says, hey, pay attention. This guy Nixon took us off the gold standard. Something's going to change. So we had this biggest economic run-up in the history of the world. So why, so everything was chugging along, and then it started to crash in 2000. Then it went to 2007 crash, and now 2016 is going to crash again. But in the meantime, the Fed has printed $4 trillion. Why would you, so saving money kind of made sense prior to 2000. But after 2000, why would you save when we're going into quantitative easing 4? So I'm not saying it's good or bad. It's got to pay attention to the trend, to the historical macro view. When the Fed is printing money, don't save money. When the Fed is printing money, go long the stock market. When the Fed stops printing money, which they did, get out of the stock market, and they stop printing. So that's why the market today is crashing. It's nothing to do with fundamentals. It has to do with manipulation. And that's what I teach. So pay attention. But the average person is, I have a 401k. I'm saving money. And I'm investing for the long term in a well-diversified portfolio of stocks, bonds, and mutual funds. It's good for the middle class. I'm not middle class. I don't want to be. And I'm afraid those guys are going to get wiped out in 2016. As Icon said a couple of days ago, he says, if you're a middle class person with about $1 million in the market, and you can't afford to lose 40% of it, get out to cash right now. So as I said, I got out in May. I made my money. I'm out. I'm in cash, not savings. And I'm getting ready for the market to go back down so I can go back in again. The average person is buy, hold, and pray. So that's what so it's poor, middle class, rich. Which one do you want to be?
Let's talk about the stock market in 2016 then. We've just come off a very poor quarter. The S&P's been down I think it's 2 consecutive quarters, the Dow Jones 3. You're talking about a crash in 2016. How bad do you think it's going to be?
The biggest in world history. I think we're going into a depression like we've never seen before. And that's why, I always tell people, I said, I'm not an allocation guy because I like debt and I think it's going to be a great time is what I'm saying. But I have the skill set and the mindset to do it. And I don't need money. See, as long as you don't need money, you can do what you like. Because I can put a deal together. A lot of money out there. A lot of people don't know how to put a deal together. So anyway, I think it's going to be so bad that I always say you should have 4 precious metals. Gold, silver, guns, and bullets. Because if you have something, somebody's going to come and steal it from you. So that's why I have, you're in Texas. I love Texas, fabulous place. I live in Arizona, fabulous place. We have machine guns here. We don't have Glock 17s. We have machine guns, belt-fed. Thousands of rounds of ammunition. I'm a former Marine, so I kind of think that way. But anyway, those are the 4 precious metals: gold, silver, guns and bullets, food and water, and shelter. Those are the basics. You got those covered. So that's why what Dave Ramsey is saying, live debt-free. So if you're afraid something's going to happen, you should pay off your house. But I think it's silly to pay off your house when interest rates are so low. When the interest rates, I just refinanced $300 million from 5% to 2%. Most cash flow I've ever made on one transaction. I didn't buy anything. I just refinanced from 5% to 3% on $300 million. You know how much money I made? So money's on sale today, and Dave Ramsey is saying, get out of debt. I'm going, well, it doesn't make sense to me. But if you're middle class, it makes sense. On top of that, because it's debt, I don't pay tax on it. And the middle class guy say, well, I don't want the IRS to audit me. Well, then you should follow Dave Ramsey. That's kind of my message.
Let's talk about gold and silver.
Have a gun,
Okay.
especially here in Texas, because most Texans have guns.
Yeah, that's a good thing, isn't it?
Well, it depends. If you don't have one and they have one, it's a bad thing.
It's called herd immunity. About gold and silver, especially silver, they've been beat up over the past few years. Would you like to project where you think they might go in the next 2 years? Especially if you think another round of heavy QE is coming?
Yeah, I don't think that way about gold and silver. Let me tell you about gold and silver. Gold and silver is like guns and bullets. They're called insurance policies. Okay, what in '74 I read Rand Paul's book on something. I forgot what it was. I wish I had it. But he said that 200 years ago, whatever it was, these Spanish galleons went down. They were filled with gold. They were stealing from the South Americans and shipping it back to Spain. These galleons went down. And today, people still dive looking for those Spanish galleons full of gold. Okay? But what Ron Paul said, he says, if an American ship goes down with US dollars in it, 10 years from now, nobody's going to dive for it. So in other words, the dollar's toast. So the reason I buy gold and silver, guns and bullets, it's called a hedge or it's called insurance. Because it's kind of doomsday mentality. And people say, well, you're so doomsday. I said, no. If you're an investor, you plan for the worst, prepare for the best too. You have both sides of it. So when the markets go down, I think that's excuse my F word, I think it's fabulous. I'm going to make more money when it crashes. But I also got to protect myself. So that's kind of my mentality. It's always a good time, no matter what.
Not for Glencore, and I want to talk about that a little bit because it's in the news. I know you're not an equity analyst, but I'm sure you have an opinion on this. The company's been beat up. People are worried about its debt. It's lost about 70% of its value this year. Do you see this as being kind of a pivotal moment? Do you see it bleeding? What are your thoughts on Glencore and the implications?
Well, Warren Buffett said it best, He says, when the tide goes out, you find out who has no pants on. So they got caught with their pants down. They obviously thought they were going long. They obviously thought that they could buy with debt, something that was volatile. And that's all it is. And then number two, I'll bet you there's mismanagement in there. I bet you there was a cockroach in there stealing money. So it's more than just Glencore. It's just stupidity. And, there's always going to be stupidity. So they got caught going long when the market went short. Look, we're going to a crash. We're going to crash. The problem is China has finally started to slow because America stopped buying from them. What that means, the biggest stock I watch is Caterpillar. Caterpillar just announced they're going to lay off 5,000 employees. And then next year, 2016, another 10 to 15,000 employees. That's what breaks my heart. These poor guys, they put their life and soul into this company, and Caterpillar represents, the BRICS, the emerging markets. That means the emerging markets are crashing. Now, as the money flows back into the U.S. dollar gets stronger, right? So these BRICS countries who borrowed and are denominated in dollars, you're going to bankrupt them. So Brazil's going to go bankrupt, Russia's going bankrupt, India's going to probably go bankrupt, China's hitting bankruptcy, and South Africa's hitting bankruptcy right now. Puerto Rico just went down. In other words, what's happened in Greece is going to be a worldwide phenomenon because as the emerging market represented by Caterpillar crashes, the world economy goes with it. And I fear for the people. That's why I write, that's why I speak, that's why I don't sell securities and all this, because there's no security if you don't have financial education.
I have to echo your sentiment on Caterpillar. It's certainly bad news. Those jobs will be missed, and it's also a sign of the business cycle turning. So I agree. Lots of bad news, especially for emerging markets.
Well,
I can't let you go.
Markets, it's the world. You see, when they can't pay off their debt anymore, there's going to be a vicious cycle in there. So that's really, and then you're going to see, starvation and social unrest. And it's money.
Do you think the Glencore situation is analogous to Lehman, as Lehman was to real estate?
No, my friends told me the reason Lehman went down was because they failed to play ball during the LTCM crisis, long-term capital management. This was the Russian ruble crisis. So Lehman was supposed to back up the boys. Like I talked about, Bucky Fuller told me there was this thing called GRUNCH, Gross Universal Cashless. The ultra-rich says, hey, Lehman, we're in trouble in Russia. Long-term capital management is going to go down. And Lehman says, we won't participate. So this time when it went down, they said, hey, Lehman, screw you. So they screwed Lehman. So this tit for tat is revenge. That's the rumors. Because I have friends inside there that says nothing to do with anything like that. That's like, you screw me, next time I'll screw you. So I don't know what happened to Glencore, but from their debt structure, obviously they were going long. So they borrowed money to go long, and they went short. So they got caught with their pants down.
Tough game, yeah.
That's what stupidity does, how many funds have beat the index? Almost none. And you pay a lot of money for those fund managers, and they can't do even a decent job. Why would you put your money into a fund? I don't know why. You can do better by yourself losing your own money.
Robert, I know you have to run, but I can't let you go without asking you about your friend Donald Trump. On the political circuit, he's been making waves. He's doing extremely well. And two questions, I guess. First of all, your thoughts on his campaign. I know you've publicly endorsed him, so you must be happy he's doing so well. But in addition to that, I'd like to know what you think of just the idea of successful businessmen going into politics, because government and businesses are so much different.
Yeah, I mean, I endorse Trump, but I'm afraid from him as my dear friend, and he's a good man. He's a very, very good man. I'm kind of shocked, though, at how he took on the Mexicans, because my Mexican friends, my Hispanic friends are great people, And I don't know why he attacks so hard, but that must be part of his strategy, because he doesn't do that up front. He's really kind of a funny guy. He laughs all the time. He pokes fun. He pokes fun at you all the time. He's a guy's guy. Very smart, very good man. His kids are fantastic. The reason I endorse him is you have to look at the political and economic climate we're in today. And, when I looked at all those candidates on Fox or CNN, whatever it was, I had to ask myself, how many of them know how to make money? And let's say there was 10 candidates. There was only one that knows how to make money. The rest only know how to spend money. And the problem with Fiorina, she's very good. I hope she makes it. But she is an employee, where Trump is an entrepreneur. So there's a very big difference. So why did Fiorina never go bankrupt? Because she's an employee. You see, entrepreneurs go bankrupt, but it's not personal bankruptcy. It's professional. It's a corporate bankruptcy. So what Trump was trying to explain to people is the basics of financial education. If you're an entrepreneur, you better understand bankruptcy, because you'll start a business and it might not make it. It's best to bankrupt, because you'll lose 1 out of 10 businesses. Whereas Fiorina will not lose anything because she doesn't start a business. She's not on the hook for it. So those are the big differences. So there's corporate bankruptcy and personal bankruptcy. Fiorina couldn't go personal bankrupt because Hewlett-Packard gave her $21 million to get out of there. They didn't want her. She fired 30,000 people. So it doesn't mean she's a bad leader. It means she fired 30,000 people, and Trump, being an entrepreneur, had some bankruptcies. But you have to understand, with financial education, this is why I say our schools are not doing a good job teaching us this. If you're an entrepreneur, you better understand corporate bankruptcy pretty well, because you probably will make some mistakes. Whereas you're an employee like Fiorina or this guy Carson or this guy Rubio, they'll never know what bankruptcy is. They know how to steal money, but they don't know how to make money. So that's my long way of saying, of all the candidates, Hillary and Bernie Sanders included, how many of them do business internationally, and how many of them know how to make money? There's only one candidate, and that's Donald Trump. Now, I really don't want him to get elected because he's a friend of mine, but he is the best candidate. Does that make sense to you? Maybe a little bit, yeah. He is a fighter. And a lot of people say, well, we don't want to fight. So, well, you want somebody like Obama? He's a nice guy, but a weak leader. So what do you want? Nice guy, weak leader, or a guy like Trump who likes to fight? And so, oh, Obama is popular because he doesn't say anything. He does stupid things like give people money. And this Obamacare is going to be a disaster. I'm not against Obama. I'm just saying we're going deeper in debt. And that's what concerns me. The biggest problem in America is right here today. It's called the baby boomers, Social Security, and Medicare. We're bankrupt. We're bankrupt to the tune of $100 trillion. How are we going to pay for baby boomers? I don't know. On top of it, I said something that goes over most people's head. From 2008 to 2015, what the U.S. Treasury did on fiscal policy, they stole the money out of the government employees' pensions. So government employees like my poor dad, school teachers and firefighters and all this, they don't have a pension. And it's like Social Security is empty. The average person doesn't know what that means. Basically, your own government robbed you, stole from you. And now your kids are going to have to pay for that. That's how serious this is. On top of that, you have Caterpillar going down, which means the emerging markets are crashing and they can't pay the debt in dollars. So that's why the BRICS Bank was formed last month. Brazil, Russia, India, China, South Africa, is because the BRICS Bank is going up against the IMF and the World Bank. And you ask the average guy eating a snow cone in Disneyland, what is the BRICS Bank relative to IMF and World Bank? They go, huh? That's how stupid we are. They don't know. So that's what financial education is. So if you don't understand what the BRICS Bank is, and the IMF versus IMF and World Bank. See, the IMF is European, the World Bank is American. That's how they control the world, through Goldman Sachs. Now, I love those guys because they give me a lot of money. But the poor and middle class are getting screwed. And the biggest culprit is the academic system. If the school teachers were really professional, you should sue them for malpractice. Now, I'm not blaming the school teachers. What I'm saying is our system of education is broken also. So that's why I formed the Rich Dad Company, and I sound like a contrarian. I think I make sense personally. So if you want to be poor, Susie Orman, middle class, Dave Ramsey, rich, me. That's the difference. Thank you.
There you go. My guest has been Robert Kiyosaki. He's the best-selling author and co-founder of Rich Dad Company. For the best in financial education, please visit him at richdad.com. You'll find all his books, including his newest release, Second Chance, as well as a cash flow board game, and information on his radio show and workshops. Don't forget, you can get free ebooks on his site, and if you're an iPhone user, definitely pick up the No Crap app.
Also,
Robert,
there's the video called The Man Who Can See the Future. My job is to teach you to see the future, and then you make your choices what you want to do. So the video is 60 minutes long. Get together with your family and friends and study it, discuss it, talk about it. I don't have answers for you, but you have your own answers.
Robert, thank you so much for coming on the show. Really appreciate it. And don't forget to visit powerandmarket.com for insightful interviews with the world's leading experts in economics, finance, and investing like Robert Kiyosaki. Coming up next, Paul Van Eden of Cranberry Capital joins me to discuss the gold market. And later, precious metals aficionado David Morgan of silverinvestor.com will join me to explain what's going on with silver. This is the Power and Market Report.